Good morning, good afternoon, and good evening to all of you. Welcome to today's discussion on the future of the Bretton Woods institutions. I'm very pleased that our discussion is taking place in the context of the IMF and World Bank annual meetings this week. So today is the first day the World Bank and IMF annual meetings are open this week. Let me first offer a few very brief opening remarks. This year, as we all know, marks the 80th anniversary of the IMF and World Bank, the so-called Bretton Woods institutions that were founded in 1944. At that time, the world was a very different place. Over half of the population lived in extreme poverty, and much of Europe had been destroyed by the war. The IMF and World Bank were established to promote financial stability and economic development and growth. With technical expertise, significant lending capacity, and convening power, the pair has contributed enormously to international cooperation and prosperity in the past 80 years. While this may be an occasion to cheer the success of both institutions, it is also an opportunity to reflect what has happened and what lessons that can be drawn for the future. The world today is facing multiple challenges: low growth, high debt, demographic shifts, climate change, and most importantly, the rising geopolitical tensions and conflicts, and with them, economic fragmentation. On the other hand, there are also enormous opportunities associated with the rise of emerging market developing countries and the fast-changing technological advancement, particularly AI. In the face of these challenges and opportunities, how can the IMF and the World Bank thrive for the next 20 years when they turn 100? How might multilateralism evolve? What would this mean for the role and work of the IMF and World Bank in the years and the decades ahead? How can they be better equipped or reformed to bolster international cooperation and remain legitimate, relevant, and effective? I'm sure that there must be many more questions on the mind of all of us. It is a high time to think deeply and carefully. We are very delighted and really greatly honored that Lord Mark Brown is joining us today for this virtual discussion and making a presentation on this timely and important topic. Mark is currently president of the Open Society Foundations and a former Deputy Secretary General of the United Nations. He's currently also playing a key role as a member of the group of global external advisors for the Bretton Woods at 80 Initiative, a project organized by the IMF and World Bank to review their past and assess their future. Mark recently wrote an excellent article on Financial Times regarding IMF and World Bank reforms, together with another excellent piece by the FT editorial board itself on the same subject. Here, Joanna, I suggest that the IFF Secretariat share both pieces with our audience after today's discussion. I will first turn to Mark for his presentation of about 20 minutes, and will then open the floor for questions from the audience. For those of you who would like to raise questions or comments, please indicate in the chat box so that I can collect the questions and then turn to Mark. So with these words, Mark, the floor is yours. Again, thank you very much for being with us today.
Well, Jianhai, thank you for the invitation, and thank you for so many friends and colleagues from around the world joining this discussion. And, you know, I think I'm in awe of your ability to assemble such a large group of experts for a discussion like this, and it's of huge value to this project that I'm undertaking to have an opportunity to talk to this audience. So I begin with that. Welcome to all of you, and thank you for joining, and say how much I'm looking forward to hearing your questions and views. Jianhai has referred to the article I wrote in the Financial Times. I think the key point, really, in a way, of that article was to say we tend to excuse our inaction around reform of the Bretton Woods institutions today by saying, well, it was much easier in 1944. The world was towards the end of a hugely destructive global war, and statesmanship was relatively easy. Everybody wanted to get to the peace and reconstruction. In truth, the conference was a lot more acrimonious and divided than that. When the delegates met at Bretton Woods, they all disagreed about a lot of issues. And, you know, ironically, one of the little historical footnotes of that conference is that the US was pushing for a larger chair for the then China delegation, a larger quota or shareholding quota for China than other delegates thought was merited. So, you know, it had its ironies of history as well. But I think the key point was that it did a hugely ambitious set of treaties did emerge for this, governing the establishment of the IMF and the World Bank. And, you know, so when now at 80 years old, the two leaders of those two institutions, Ajay Banga and Kristalina Georgieva of the IMF, decided to take a look at the next 20 years, you know, obviously they wanted to go about it in a very different way to the origins of the two institutions, where, you know, the dialogue was frankly largely transatlanticist, where two formidable public intellectuals, John Maynard Keynes and his counterpart Harry Dexter White in the US, dominated the discussions. And because of US power, not surprisingly, Harry Dexter White usually got the best of the argument. But, you know, today you could not imagine, you know, one or two intellectuals, even if they were of much more diverse backgrounds than that, alone designing institutions of this global importance. So while I am one of a panel of three with Patrick Hachi, the former Prime Minister of Cote d'Ivoire, and C. Mulyani Indrawati, the outgoing Finance Minister of Indonesia, we modestly see our role as not generating the ideas ourselves, but conducting as wide a global conversation as we can to solicit ideas and try and understand where there is enough consensus to allow action and progress. So here we are at 80. These two institutions have evolved a long, long way over those 80 years. There were 44 members who attended that original discussion. But the big jumps in membership, as you know, came both with decolonization and then latterly with the breakup of the Soviet Union. But during those post-war years, the Soviet Union, although it had been participated at Bretton Woods, was not a member. And so in some ways, some of the geopolitical tensions that we see today in the institutions were outside it during a long part of that period. And the institutions, you know, grew and represented a, you know, very much American-dominated economic vision of the world, of a globalization which, you know, created global markets, extraordinarily good for US business, etc. But as we've seen, very good for other parts of the world too. I mean, this was a global order which allowed China massive growth in per capita incomes. It allowed much of Southeast Asia the same, and other regions as well. So, you know, it was a region of intermittent periods of great success, and particularly the decade at the end of the last century and the first years of this century were a period of historically rapid growth, dramatic reductions in poverty around the world, obviously largely driven by the success in China, but by no means exclusively so, with tremendous success elsewhere as well. And, I led to a period where these two institutions seemed to be the architects of a dramatic economic expansion with wide benefits to many parts of the world. Towards the end of that first decade of this century, we're all aware, and that we can debate exactly when it happened, an awful lot of that progress seemed to stall. And we're now at a point where in many countries, life expectancy is reversed, educational attainment is falling, and poverty numbers are once again even beginning to grow. That is both short-term issues like COVID disruption, but the reason it's been given the name the polycrisis is, it seems to have a profounder set of roots than just a single public health breakdown. Arguably, it goes back to the financial crisis of 2008-9, but is exacerbated by the impacts of climate change on so many parts of the world, by dramatic demographic changes, with Africa now growing very rapidly as other regions' populations are in many cases stabilizing or even beginning to decline. And in the midst of this very difficult global political economy to manage, there is, of course, dramatic fragmentation at the political level. The competition between the US and China, the rise of middle powers that are, anxious for a bigger voice, not just in the Bretton Woods institutions, but in the Security Council and in their own region's future political direction. And, more generally, from that 80 years ago colonial era in which these institutions were designed till today, there has been a dramatic shift in the sort of political cultural expectations of countries. They anticipate, when a World Bank program or IMF program is agreed with them, that they are genuinely partners at the negotiating table, that their view of strategic priorities is respected and reflected in the programs agreed. So we're in a period of great political choppiness, if you like, where it's very challenging for the institutions to, find their footing politically. And, I think that the main debate, and I'm sure it will come up in the discussion this morning, today, is around the continued further shift in the shareholding allocations of these institutions, where Europe particularly is overrepresented. It is often, the finger is pointed at the US, but in fact, the principal source of overrepresentation in terms of relative share of the global economy is the Europeans. But I think, and I and my colleagues think, that this is actually a more dimensional problem than just the shareholding, important though that is. That it's more about the ability of the management of the two institutions to retain the independence and be supported by their boards in so doing, in ensuring that their programs are transparently universal and based on economic need and strategic rationality, rather than on any particular region's political preferences or wishes. And so, I think, as I say, this issue of apolitical character of the institutions, restoring that is as key to giving everybody a sense of shared ownership of the institutions. Let me move from the questions around politics to those around economics, where, again, there are a series of issues which have, come to the surface. I mean, the two institutions, put out impressive amounts of funding during the COVID period. The issue of repayment terms has been a difficult one for the IMF. And more typically, it's led to, challenges to IDA going forward as well. And it raises questions about, SDR use, etc., as to whether there is yet enough flexibility in securing affordable short-term finance for countries. And, COVID brought home very strongly the more wide issue of liquidity and of how so many countries' financial vulnerability can come from external shock, and yet too often it's treated as though the solution to disease is internal and around their own domestic public spending, rather than supporting them with the liquidity to sort of to ride out externally imposed shocks. So there are issues around that. There are issues around debt where we have been very struck in our conversations that whether it is talking to policymakers in small gatherings in donor side, or in a recent visit and consultation in West Africa, there is a real antipathy towards debt. A fear that debt very easily becomes unmanageable because of changes in the terms of trade, unanticipated slowdowns in domestic growth, etc. So, while people recognize that debt is a key part of a sensible financing strategy for countries, the expectation that developing countries in a race to reduce issues of inequality and to transition towards green growth would be willing to take on much higher levels of debt. So far that is not what we've been hearing in our consultations. There is a deep wariness of debt. Some of that, of course, comes from the difficulties that countries have encountered in restructuring debt in recent years, where the shortcomings of the Paris Club, the need for China to be at the table, for example, as the main number one creditor nation in many parts of the world now, is absolutely critical. And I think there is a hope that the IMF can continue to try and press convening arrangements beyond the new debt forum, or through enhancing that debt forum, which would allow better, much more rapid debt response than we, for example, saw in the cases of Zambia and Ghana, etc. There is also a viewed, if you like, incompatibility between the calls of the leaders of the institutions for trillions, not billions, a war cry particularly developed at the World Bank, and the actual country programs the two institutions sign off on, which are billions, not trillions. And of course, for very sensible reasons of, fiscal space, of this issue of looming debt levels, of depleted and unambitious domestic revenue generation, et cetera, means that the country team economists in both institutions, are worried about issues of sustainability and affordability for their developing country partners. But it means that the call to transform the world with, into a new green energy system, and to remove the most persistent parts of inequality in the global economy, seem deeply at odds with the reality. There is a gap between rhetoric and country practice in the view of many. There is also a belief that maybe the institutions have not quite updated their economic thinking as much as is needed. There's people point out that, even their physical geographic home, the United States, has in recent years essentially had a green industrial policy with the IRA. Both presidential candidates are, talking about, a sort of much more state-led model of development with sectors they wish to champion, and the expectation that they will use tax and other policy to bring, private companies into those sectors. and indeed also, obviously a focus by both candidates on much more domestic repatriation of industrial jobs. So, in this world where you see the economic paradigms in flux and drifting far away from the, free trade globalization of, some years ago, there is a questioning in in the conversations we hear, about, have they got the right model? And when you put together this worry about debt, where the IMF has really made it its lead point going into this annual meetings, although, a worry that, debt levels are en route to very shortly be 100% of global GDP, although they do point out that the US and China are responsible for a large part of that growth, and many developing countries, the numbers are coming down. But nevertheless, with a big looming debt problem, there is a question of how do you navigate that to find the fiscal space through enhanced domestic revenues, through trying to attract in private sector funding in equity rather than debt form. What are the sets of arrangements you make to allow a sort of an affordable level of economic ambition on a much greater scale than currently for developing countries? And this brings me to one other point we're hearing, which is that there is not enough differentiation still inside the institutions between different groups of countries. Countries still get categorized into broad groups, which doesn't do justice to their individual situation. And particularly to be noted in this is the fact that by the end of this decade, the majority of the world's poorest people are likely to be in fragile or failed states. When I was myself a staffer at the World Bank and then ran UNDP, the biggest single group of very poor people were in large countries which were busy modernizing their economies in fairly dramatic ways: India, Brazil, China itself, others, where there was a sort of expectation of a sort of trickle down economics, to use a dangerous word, but nevertheless one where there was a view that all boats would be lifted by the dynamism of the national growth rate and the number of jobs being created. And we're now dealing with a group of countries where that is not such, and where it simply isn't an available strategy, and where there's a feeling that you're dealing with weak partner institutions across the table that neither the bank or the fund are very good at dealing with. And that if you then go up to a very different set of higher middle-income countries and middle-income countries, you have, particularly in Asia, but possibly in Latin America as well, some countries which are beginning to question the utility of the bank, particularly. Do we need its project funding? The IMF as well, where the availability of IMF resources are not scaled to the size of their potential needs were they to face a financial crisis. So, how do you bulk out the potential rescue resources on the side of an IMF, and on the side of the bank, make your finance, quicker, friendlier, more strategic in its use, so that those countries still see value in having in their portfolio of borrowings World Bank funding. So, a sense that there are different kinds of countries with different kinds of needs that need to be addressed. And then just one last area to touch on: partnerships, where everybody really sings the praises of the AIIB, and the reason I suspect they do is, as a new institution, it's got none of the sort of built-in bureaucracy of the first generation of MDBs, and is very flexible about its co-financing, not demanding a whole suite of documentation of its own, but quick and nimble to join in project financing developed by others. And in that sense, it's a model of what should be a much wider set of MDB and National Development Bank coordination, because when you put that whole system together, as Remy Rieu does as the head of Agence France Développement, AFD, he argues, you have a potential 23 trillion pool of public finance at the national and international level, and that we should have much greater capability of ambitious co-financing strategies, but where the bureaucracy of not just the World Bank, but other older MDBs has made that very, very difficult to achieve. And indeed, the volume of World Bank co-financing has sharply decreased in recent years. There is also the issue of the private sector, and how these institutions become much more private sector friendly to leverage in a much higher volume of private sector finance, because it's those great savings mountains of pensions, etc., which are where the real resource lies for development on the scale of the trillions that World Bank leaders have called for. And a lot of that private sector finance is also local, with small domestic SMEs being the dramatic source of jobs in most biggest source of jobs in most economies, but getting rarely the attention and support they deserve. And then finally, for the IMF, how they, similarly through the BIS or through swap lines, find ways to increase their multilateralized capacity to step in when there is a liquidity crisis in the larger economies that are beyond their own means alone, to stabilize. And I was the sort of G20 Sherpa, ministerial Sherpa for my government, or one of them, the UK government in 2009, at the time of the stabilization of the financial crisis, and remember the importance of temporary swap lines and commitments in stabilizing financial markets. And I think we all feel we need to be ready for that next crisis. And maybe just therefore one final word, because I know many of you are IMF watchers, and I shouldn't finish without saying it, a great interest in the future of the IMF surveillance, both the need for it to keep up in the financial surveillance with the greater complexity and non-transparency of financial markets in many parts of the world, but also with a focus on the other issues of macro criticality, such as climate and even human development, but wanting to ensure that that is done in a smart, contained way so that the fund is not spread too far and too thin. So as I say, let me stop there. None of these issues are intended to be definitive reflections of where we would conclude any of this conversation and consultation, but I wanted to give you a sense of what we've been hearing and would love to hear your questions and responses. Jianhai, thank you.
Thank you so much, Mark, really, for your very comprehensive presentation. You covered a truly wide range of issues, from the origins of both institutions, then to the evolution of them, including the dramatic shifts in today's political and economic landscape, as well as many, many economic, financial, and operational matters concerning those institutions, in a way also concerning the global economy. You mentioned a term called the rising middle powers, clearly, which is a very, very important, interesting concept. Probably my understanding is middle powers may be broader in concept than the global south per se. So, but anyway, these are very similar terms, which are very, very interesting. So we are already receiving questions from the audience. Let me turn to a few questions first. Then I will turn to Professor Zhang Liqing, as well as Song Ming and Zhu Xian, to ask questions. The first question is, Mark, as we all expected, we all know that our realities today are very different from those 80 years ago. We are living in a globalized world, but one that's facing increasing pressure of fragmentation and conflicts. Now, in this context, what should we think about the IMF and the World Bank going forward in the next 20 years? The question from Nikki Asia, for example, is who can rebuild the Bretton Woods today in light of this context? The US, China, Europe, probably the whole world together. So that's one question. So who can do it? Then, whether the IMF World Bank should consider changing mandates to enlarge them, therefore to cope with the changing global political and economic environment. That's the big question. Then I'll ask a few other questions from the audience.
Okay, well, let me just take those then first. I mean, we've heard two views on who can rebuild the Bretton Woods institutions at this point. One is without a world hegemon, to use this political science term, such as the US in 1944, you're never going to get massive pushing through of, a single big new institutional idea. It took the US, whether it was the League of Nations, the UN, the Bretton Woods institutions, to really push for it, goes the argument. And absent that, how do you secure reform and change? My own answer is that, maybe if you wanted a single new big idea from scratch, maybe you would need a sort of more unipolar world than we have today. But when actually the challenge is how do you adapt these institutions to a world where there are a multiplicity of power centers and where you have dispersed power from the single center, you should have the new clients and users being part of that redesign. And it shouldn't be impossible with the right kind of consultation and leadership to, come up with reforms to the institutions which reflect this distributed power and of today. On the second point, and I just think it needs powerful leadership, and it's not anymore going to come just at the intergovernmental level, given the intergovernmental conflicts we currently have and standoffs. It will come from the leadership of enlightened officials, such as today's two leaders at the World Bank and the IMF, who are, big change agents in both their institutions, and I think are looking for coalitions of support from their member states to get change done. And having myself worked as a deputy to Kofi Annan at the UN, I know the importance at the right time of that kind of leadership. You don't lead over the heads of governments, but you lead in a creative way that builds government support behind you in a consensus-based approach. And I think there is an opportunity for that today. On the enlarging mandates, I think these two institutions, are in a sense the strongest at this point of the multilateral system created in 1944-45. Tragically, the United Nations has been in many ways quite weakened in recent years. I'm sure it will recover. But, I think these two institutions are the bedrock. And one reason is that they deal with economics and not security and politics. And I think it is easier to get agreement around economics because whatever the nature of the political government that a country has, there is a commonality of interest in seeing stable growth, international trade, etc. And so I think it's a little bit easier to find shared ways forward. And, so these two institutions, even though they are a much smaller share of global GDP today than they have been at different points in their history, are, I think, going to, without a doubt, be critical building blocks of a new system. But I think it's not so much about enlarging mandates. I think you're seeing that as part of it. It's enhancing partnerships to mobilize not just their own resources, but resources from the MDB system, the private sector, central banks, in the case of the IMF, to enable much larger scaled response to future crises. And in the case of the bank, much more investment now in development and hopefully therefore averting those crises. So enlarging mandates, yes. Enlarging partnerships, even more.
Thank you very much, Mark. So there's another question from AP. The question is, can cryptocurrencies like Bitcoin replace Bretton Woods and reform the global financial or monetary system? Now, before you answer this question, if you don't mind, can I turn to Professor Jiang Liqing also to comment on this question, as well as raise your own questions? Professor Jiang is a professor of the Central University of Finance and Economics in Beijing. He has followed up on issues concerning international monetary system for 20, 30 years, a truly expert in this particular area. So that's why when I ask this question, then I ask him also to comment on it, if you don't mind, Professor Jiang.
Okay, thank you very much, Jianhai. I really appreciate the speech given by Mr.
Brown.
Brown, yeah, sorry, I'm sorry. And I have actually three comments and questions related. The first is that I think for building up a more resilient global financial system in the future, it seems to me that there are three factors need to be carefully considered. One is the economic impact of the rapid development of AI. The second is the macroeconomic consequence of continuous policy actions on climate change. The third is the economic consequence of geopolitical tension and the rising of global south. I think these factors are very important and need to be considered when we think about the future of global financial system reform and the mandates of the Bretton Woods institutions. I'm just wondering what kind of policy response do you think the Bretton Woods Institute should have in this regards in terms of policy design and institutional changes? This is one question, probably a little bit it's larger questions, broad question. The second is can you make some forecast or estimation on the reform of governance of a Bretton Woods institution in terms of the policy changes, possible change in terms of the possible change of shareholding and voting power by global south, especially China. We all agree that global south and China, especially China, should have larger shareholding and voting powers in these institutions. But can you give some a little bit concrete estimation in the near future? And lastly, I have a question on the SDR, because the SDR has been a very important role in dealing with the financial crisis in the past decades. I'm just wondering, should we more actively, more frequently allocating SDR in order to make make this instrument more usable in dealing with the future financial crisis. So personally, I believe that we need to, the IMF should more actively, more frequently allocate SDR like we did, like they did in the 2008 global financial crisis and the pandemic in 2020. So how do you think we should do something similar in the future? So that's my questions.
Mark, if you don't mind, can I add a little bit on the SDR issue?
Please.
I also received a question from Ms. Cao Li, who is the Vice President of the Boao Forum for Asia Academy. She had a similar question, say, given that we are facing a huge financing pressure for climate change, whether the IMF should consider issuing green SDRs for that purpose. Thank you.
Look, let me just try to let me first. I think on the Bitcoin versus the dollar, etc. I mean, I hesitate to predict where that is going. You know, what I think is certainly the case is, you know, the IMF, you know, has a basket, obviously, of reserve currencies. You know, it was well aware that the world is more than a dollar currency, even if, you know, the dollar remains dominant. And I expect we're going to continue to see, you know, evolution in that. And the IMF has, you know, itself made forecasts of the risk of us breaking down into a, you know, two rival currency world where you had half the world organized around the dollar and, you know, half around the renminbi or a pool of currencies. You know, I think we all have a huge interest in trying to preserve, you know, the evolution of, you know, a global system in this regard. Whether or not Bitcoin one day plays a part in it, I don't know. But, you know, what I am certain of is human hand and human run institutions, you know, will remain critical in the policy judgments needed to manage this. So, you know, the idea of a Bitcoin solution, which in a sense provides countries or firms, you know, an insurance policy that they can automatically call on in terms of a moment of financial crisis, I think probably remains implausible. On the issues of the three issues around the impact of AI, we absolutely agree there. And, you know, again, both the fund and bank are writing about this a lot, you know, both about the opportunities, obviously, and the opportunities maybe for some developing countries to leapfrog, like they use the cell phone to leapfrog in terms of economic development, but also the risks to huge slices of routine employment, and indeed potentially to quite white collar employment as well. So, you know, I think everybody is trying to weigh the costs and the pros and cons, the costs and opportunities of AI. You know, I think with climate change and geopolitics, we look at these as both critical, that, you know, geopolitics is disrupting so far the coherence of the response to climate change that we would want to see. It's, you know, not allowing global adoption at fast enough rates of technologies, where obviously in some cases China has, you know, a very strong early lead, and we need to find ways to overcome that, I suspect. On the issue of
sorry, Mark, we have lost your connection.
recent quota increase, it was, made very clear that there was a postponement, but not more than that, of the issue of shareholding. So, I don't want to get into the details. I'm not privy to the exact conversations of when and how, but I think that's unfinished business, and I think everybody recognizes that. Just on the SDRs, the difficulty, whether it is green SDRs or just further allocations as post-COVID and financial crisis, is not actually so much on the issuer's side. It's on the user's side. We've got to get to a point where countries agree, wealthy countries agree, that they will reallocate their SDRs to, poor country use or to greener economic use. And, until we get that coherence and consensus on SDR purpose, the issuance can be done. I mean, it obviously needs the support of the board, and I recognize it might not have that today. But the reason it doesn't have the support of the board is this continued division about the uses of SDRs, and that's where we need to build consensus.
Thank you very much, Mark. Sorry for the connection problem. Thank you very much for your answers. Now let me turn to Zhu Xian, followed by Professor Song Ming, if you don't mind. Zhu Xian, please. Zhu Xian, I think you should turn on your speakerphone. Yeah. Thank you.
Yeah. Thank you, and Mark, for your excellent presentation on this very important issue. Let me focus my question or comments on the other side of Bretton Woods Institution, the World Bank. You work there. You also probably know, even 20 plus years ago, the corporate culture and also the operating models. In my mind, because after I serve as World Bank ED for China, I also work in the World Bank as a staff. I work as 2 times as a country directors. I think the one thing that still somehow puzzles me is that when World Bank was established, naturally is an agent to deliver ODA, or part of its job is to deliver ODA, because that time low-income countries are majority of World Bank clients. But that has changed. But still, I think to put it a little bit bluntly, World Bank model or even other MDBs is such as, I provide you long-term financial resources. You follow my policy advice. And also the other thing is World Bank, other MDBs all together focus on sovereign lending, meaning that you only lend to the sovereign countries or with sovereign countries guarantee. But I think the globally situation is changing. If you follow that model, no matter how you want to change your line of products, you have a lot of limitations. So I think that's also the part of reform World Bank, other MDB should seriously think of, because these days, emerging market countries, they probably need what they think is a priority rather than to sort of trickle down from the World Bank from other MDBs. I just want to hear, Mark, your comments on such a concern. Thank you.
Shall I come back on that one, or?
Sure. Okay. How about let's hear from Professor Song Ming first.
Oh, okay.
Then Professor Song, please.
Okay. Thank you, Professor Lin and Lord Brown. It's been a very great learning experience for me. I'm mostly academics and not much involved in these international institutions such as World Bank and the IMF. So I have a question for the speaker. So given your presentation about this long involvement of these 2 institutions, and you mentioned about the shifting of power, shifting the balance of the economy, and etc. So given your description, I would like to know what you predict the future involvement, say for next 10 to 20 years? A related question is, we also see rising of some other international financial institutions, such as Asia Infrastructure Investment Bank, and New Development Bank, and etc. What's your view on the rising importance of these institutions and how they play the role, in this world, international framework? Are they, in competition with World Bank and IMF, or just more like play a complementary role to these two big institutions? So these are, two related questions. Thank you.
Thank you very much, Professor Song. Thank you, Mark.
Great. Well, look, happy first on Suzanne's question. I mean, like as a fellow old colleague at the World Bank, I do, agree completely that there is a changing model, and a little bit to build on what I said earlier. I think, you've got to look at the different needs of different groups of countries, and you have this, group of almost left behind countries disproportionately in Africa and Latin America and the Caribbean, where you've got very high levels of inequality still, persistent pockets of poverty, and in the case of some of them, real crises of state capability and capacity, and the potential for, increasing amounts of conflict within their borders. And you need a very much sort of grant-based or, low cost, in the case of the IMF, model of addressing these countries, but you also have to address them as primarily a development problem, not a stabilization problem, until they get to the point of reasonable infrastructure, of reasonable income levels. This issue of weak institutions is going to be persistent and just, cyclic. It's going to be a vicious cycle in which, political stability is constantly undermined by, popular frustrations with the absence of a reasonable life. And so you've got that group of countries which need, long-term public finance, international public finance at highly discretionary rates, and need patience because it's a generation-long issue to turn them round. Then, at the other end of the spectrum, you have countries which are accessing private capital markets, easily, and where, both the IMF and the World Bank have to tailor themselves to utterly different needs. They are not the dominant investor in the case of the World Bank or lender. They're one of many. How do they sort of try and influence things towards better development outcomes while competing against, that new set of partners and competitors in terms of finance provision? And there it's very much around their knowledge and advisory offering. And in the case of the IMF, their stability offering if these ever larger economies face a crisis. Turning to Professor Song, I think it is hard to predict the future for the next 20 years. And we in a sense, chose 20 years because, some bright spark had said, well, it's 80 years old, the two institutions, what happens for the next 80 years? And the two leaders of the institutions properly said, nobody knows. The world's changing so fast. Let's choose a more reasonable timeline of 20 years. But even within that, there is likely to be a huge amount of change. But I think we do know that the process of, continuing sort of redistribution of political and economic power across the world, the demography of Africa, within a generation, becoming a very large plurality of global population, that these issues are real. The impact of AI is going to be very real, and not sort of a fashion that then blows away. And I think similarly, so I think what we've got to do is go with the trends and make sure the institutions have effective responses to these trends and to their intersectionality, but recognize, that we can't be totally prescriptive. It's a matter of equipping them with the right capacities and skills to respond to these emerging trends, but not trying to be prescriptive about what the solutions are going to be now. We're going to need leadership able to take on the challenge and be innovative when the moment comes. On the AIIB and the NDP, as I said, they are proving, extremely good multilateral partners. And I think, I would anticipate they are going to grow. I would equally, though, really hope that we can sustain a single global set of development institutions where, my own country has a much smaller than the AIIB, but has the BII, whose new head is a former South African president of the vice president of the NDB. So I hope there will be these skill transfers between not just the multilateral and the regional, but between regional and bilaterals as well, as we sort of build up a network of public financing institutions that can both partner with each other, but also develop a set of products which will crowd in rather than crowd out the private sector as well. So I think, it's going to be networked solutions to financing going forward, rather than the more monolithic Washington-centered solutions of 20 years ago.
Thank you very much, Mark. Truly appreciate it. Now, there's one question, a little bit more specific to Hong Kong. The question was raised by Da Gongbao, Hong Kong. So, Mark, I'll turn to you, but I also appreciate if Siddharth could come in to explain some his points, because he was the chief representative of BIS in Hong Kong for a couple of years. The question is the role and the challenges of Hong Kong as an international financial center under dual influence of Bretton Woods system and the internationalization of Chinese currency, RMB. So meaning basically, what are the challenges for Hong Kong? So it's a little bit specific from the topic we are discussing today, but nevertheless, it's also relevant. Mark and Siddharth, thank you.
I think we should go to Siddharth first. I think he's going to have a much more detailed answer than me. I would just say, by the way, that I was the vice president of the World Bank, responsible for organizing the annual meetings, in Hong Kong, the year that Hong Kong returned to China at the end of the negotiation. So, I have a deep sentimental attachment to Hong Kong, to China, and the relationship between the two. And I think it'd be a huge pity if Hong Kong is lost as an international financial center. But I think Siddharth is in a much better place than me to address the specifics of the question.
Thank you. So I will just go back to, I was leading the team that brought the RMB into the SDR basket. And one thing at that point, which is true today, that we agreed with the Chinese authorities was that the transparency of institutions and the rule of law are key for the internationalization of a currency. There is no other factor that is more important than this. And any state intervention is not going to keep that away. And I think the same issue is important today. Hong Kong is a major financial center. It's the gateway to China. It is dynamic in the Asian economy. And Hong Kong has a unique opportunity to blend East with West, to be an anchor for the internationalization of RMB on the same par as other currencies. And how far it goes will depend on institutions, the strength of institutions in China and Hong Kong in taking this forward. And I think this is one point where China and the IMF and others have never disagreed. that over time, it is, if we look at history, UK and United States or the European Union, that it is how institutions strengthen that determines the internationalization of the currency. Maybe just stop here.
Thank you very much, both. Jerry, before I give the floor to Mark for final words, any questions or comments, suggestions? Thank you.
No, nothing further from me except to, like everyone else, say thanks to Mark, not only for presenting to us today, but for the work he's leading in this very important project. And Mark, I know you've told us this is the questions phase of the project. And just to say, we look forward very much, of course, to the answers phase, which I think you've said will come around perhaps the spring meetings. And perhaps Mark would be generous enough to come back to us at the time of the spring meetings and have a conversation similar to this wonderful one that we've just had today. Thank you, Mark.
Well, Jerry,
thank you very much, Jerry. That's what I was going to say, but I will say it in 1 minute. Mark, I will turn to you now. Still one question, but I think you may also use this question as your final words. Question is very broad. In today's fragmentation world, how the Bretton Woods twins do better to engage and to strengthen cooperation, and then also to adapt to the changing political economic landscape. You answered already the first question, but nevertheless, if you wish to summarize and conclude, that'd be great. Thank you.
Well, Jianhai, thank you. And thank you to IFF for the hospitality of organizing and hosting this today, and for all of you for attending. Look, I think these are remarkable institutions. They have played an extraordinary role in the world's economy, both its development and its resilience in crisis over the last 80 years. Perversely, they've done so from a large part of it because they have been protected from some of the geopolitical storms by the strength of the American-led G7 hold over them. And yet that very hold is now, if it's not loosened, a risk. It's not that they should, the G7 hand needs to be prized off them. It's other hands have to be added to them. These are institutions which, if they are to retain authority and legitimacy in the eyes of people everywhere and be seen as on their side and not instruments of a sort of harsh Washington capitalism, they have to spread ownership. They have to be seen as universal cooperative institutions, which, whether you live in Ghana or China or the UK or the US, you equally feel these are ours. They're serving our shared needs of global development and resilience. They are part of, if you like, a shared global solidarity for all of us.
Mark, once again, thank you so much. Let me now quickly conclude. I know that you are so busy today.
Sure.
That for your great, truly brilliant presentation and answering so many questions, and you can tell the audience is keenly interested in this very, very important topic. Let me conclude by quoting the words spoken by President John F. Kennedy 6 decades ago. He said, "Those who look only to the past or present are certain to miss the future." These words resonate with renewed energy today and also urgency today. In this context, I hope that, like Jerry, we will have opportunities to invite you back and give us an update on your important role in the IMF World Bank project to share with us your final conclusions. Of course, we wish you a great success in sharing your own expertise, wisdom, and advice to guide the Bretton Woods twins in the next 20 years. With that, thank you all and see you next time. Please also enjoy the annual meetings of the World Bank and IMF this week in Washington, D.C. Thank you, Mark. Thank you, the audience.